Alright, rides taken into today. We go over the 1 month chart. We check out the RSI. We see it meets the first requirement to enter a trade. It's right around 30. We're going to go out to the 17th, the third Friday of the month, and we're going to go check out the $9 put. Here we see we have high open interest, which is the second criteria for us to enter a trade. We also have high volume, which isn't necessary, but it's always nice to see. We see our IVs at 100. It's a little high. I like to see it usually between 30 and 70. Finally, we check to see if we have a tight bid-ask spread, which we do. We can go on and make the trade. We're going to sell one contract at 35 cents per share for a $35 credit. Always make sure to read your order summary. We see the order's been received and filled. We're going to fast forward a few days and we see RIOT has taken another dip. We sold our put for 35 cents per share. It's now selling for 42 cents per share, which means we've lost about 20% on our contract. So we're going to sell a second contract to improve our position. We see RIOT has dropped about 90 cents today, so we're going to go out to the 1 month chart and check out the RSI again, and we see it's right around 30 once again. So we're going to double down, trade, options, go back to the 17th, and we're going back to the $9 put as a -1 because we already own one. We see nothing's really changed except for the price. We still have high open interest, high volume, and an IV over 100 with a tight bid-ask spread. So we're going to buy one more contract at 42 cents per share to improve our position. Place the order, it's been received, and it's been filled. We head back over to RIOT. We see we now have two contracts, each worth 100 shares. Our average credit has gone up to 39 cents per share from 35, and we can see that our total return has dropped from a 20% loss to a 9% loss. Now that we're in a little bit better position, we just got to wait for Father Time and the market to do their thing and see how this works out. Fast forward 4 days and we can see our RIOT puts are up over 80%, so we're going to buy them back for a profit. We see here we still have two contracts, each worth 100 shares each. We see where we sold our puts for an average credit of 39 cents per share. We also see these contracts are currently selling for 6 cents per share, so we can buy them back for a profit. The main driver for causing this contract to drop in price so drastically is that the share price of RIOT went up by about $2. So we're going to lock in our profits by buying back two contracts at 6 cents per share for a max cost of $12. Done and done. As a review, we'll look at realized profit and loss, and we see that we had $77 in credits, $12 in costs for a $65 profit. Rinse and repeat.